So in this segment, I'm going to show you guys how to mark your higher highs, your higher lows, and marking your area of interest, whether it's a supply or demand zone. Now, in this video, as you guys seen, I'm on USD JPY. This is something I've marked already in the past, where this is where I feel like my zones are at, but I'm going to reset the whole chart to show you guys no matter what, you could literally find these things in seconds. So first thing I'm gonna do is delete all these markings I had in the past weeks of me trading this market, just to show you guys how easy it is to understand where the market's going and to be able to show you what you should look for when you're marking these zones. Now, anytime you start marking a market, you want to start with the weekly. The weekly is going to give you your trend, whether if this market is bullish or this market is bearish. And this, for instance, this market is bullish. We literally have a break of the last lower structure to break above the last lower high that we had before. So I'm going to show you guys how to just mark zones from your area of interest. And what I mean by that is how many times do we have elbows, these sharp pointers? How many elbows have we had hit this specific cursor? So as you guys see here at the top of this line, we'll start at the top. We have nothing. This is the highest it's been in a while. Here we have about 2 or 3, which is a zone you could technically mark on the weekly. And then here we have even more. We have like literally nothing. Here, as you guys can see, nothing. And then when we get to this zone, as you guys can see, we have 1, 2, 3, 4. So this is a respectable area of interest. And if you see how many, 1, 2, 3, 4, 5, 6. We have 6 times that we had elbows hit this area of interest, which shows to me that this is a solid area of interest to take buys or to take sells from. And just by marking it from here, we only like to mark basically when candle closes. So as you see, we have several candles closing in or below this area of interest. Me, I like to make my width size anywhere from 50 to 60 pips. So I'm gonna close this a little tighter, move it a little up. And from here, I would mark this as my area of interest on the weekly. Now, you have several more that you can mark. You have one down here where you have literally almost 3 touches. You have 1, 2, 3, and I'll even mark them for you guys. You have all of these touches in this zone right here. When you go back to the candlestick, you could see several closures above and below from this area of interest. So between here, if you see, like once you see this, you see it's all noise. And even up here, you could mark this up here, right here as an area of interest because you know, okay, this could be a resistance zone where I could take sells from the top of here down. Because every time it hits this zone up here and it closes beneath this zone, you know sells. It closes beneath this zone, you know sells. So what do you think could happen when it closed beneath this zone? From marking your area of interest from weeks ago, this is July 2024. Look, it's still respected. Even months, even a year later, January, it's still respected. It still could take sells from there down. So in my opinion, on the weekly, I would wait for this to hit this zone for me to look for sells. Now, on the weekly is literally just to mark where the trend is going, where you feel like based off of repetition, where the trade could end up. And this is why it's very important on where you mark your area of interest, your supply and demand zones, because you know whether to buy from the zone or you know whether to sell from the zone. So on the weekly, we already have the bullish trend to hit this zone, which I would anticipate for sales when it hits this zone. Now on the daily is where you would mark your higher high and your higher lows. Higher high, higher lows is in a bullish market. Lower lows, lower highs are in a seller's market, which is a bearish market. So I would then take my trend line and I would sit there and mark right here at the top of this zone. This is my higher high. From here, I know that if it breaks above, which it technically did come above, I could anticipate for continuous buys to the upper zone that we're aware about. Now, the next question you will ask me is how do I mark my lower lows or my lower highs or my higher low? Now, a trick that I've learned is you would literally take a circle, you would take it here. This is the last time that it had market structure. You would take it here. So where was there a big move? The big move happened here. Where did the market structure change? Your higher low would then be here. Why is it not here? It's because you had a snake pattern. This snake created an elbow. I had to come down to come up. This is why the lower high, the higher low is here. So I would mark my higher low here. Makes sense? Once again, you have your higher high, which then, if you guys would have marked this, it's a trend. This would have been your last higher low. This would have been your last higher high. This broke above from the higher high. It broke above the higher high. This becomes your higher high, and this becomes your higher low, which is why this is a shift of structure for then to you for to know to take buys in this market. But because this market's so bullish, I would wait, once again, for this to hit a zone which is respected to take sells from. I would take sells from this zone right here. So I would literally wait for this market to hit here, to bounce off of here, to retest here, to take sells back down to this zone, which is why when I spoke about in the previous segment, when to enter and when to close a trade. I know that when it hits this zone, it could either have a rejection to raise back up to this zone, or it could hit this zone to then come down to this zone, which then gives you your idea of whether you're going to take a 1-to-2 winner ratio or you would hold it past your average take profit. So because of that, ladies and gentlemen, marking your higher highs and your higher lows and your supply and demand zones are very crucial to when you're trading, because just like this, I know that from this zone up, and just to show you guys repetition, we haven't been this high in a very long time. Last time we were this high was back in the 80s, which is outrageous. We weren't even fucking born. So therefore, the market right now, I would still anticipate for sells from this area because as we've seen in the past year or so, we've always taken sells. Now, your markings might not always be correct. You might have a bullish candle that'll literally come up, come past here, close above here, and then shoot above. Could that happen? Yes. Am I anticipating for that to happen? No. But this is why knowing what you're doing is very crucial in things. When you look at your markings of your zones, you could see this is why it's very important. Every time it hit this zone, it broke below. It hit this zone, it broke below, it closed above this zone, it had a retest to then buy. So you could have took this literally to buy up. This bullish candle is indications that we're still in a bullish market. So because of this, marking your higher highs your higher lows, your market, your supply and demand zones are very important. And they could be used for trades down the line. This is why some traders know when something hits my zone, I know I'm going to full port on sells, or if it breaks above the zone, I'm going to full port on buys. Just like a prime example here that I showed my community that gave an amazing 1 to 10 win ratio, which had happened here. This zone was respected, as you guys see from a while ago. The same zone I marked that had a respectable area from right here, the same thing happened right here. We literally marked this zone. You could have made a ton of money from this date in July, and where the community made a ton of money from this date, which was not too long ago. And with that being said, that is why it is very important to mark these zones and being on point.